Hi everybody, welcome to this special episode which I am shooting give for trading and investment strategies going into the election outcome week. First we'll have the exit polls on Sunday and then we'll have the results next week. So I'll talk more about what the results, how we should behave subsequently after the exit polls come out. Now, talking specifically of the strategy which we should be following, we have to remember that till this week we were largely following global cues. The US-China trade war and its impact has had an effect on all global markets. We've seen corrections everywhere and India has also followed. Now next week Indian markets could chart their own course, at least for the short run, because this event is a significant event, because it will have an impact at least in the short to medium term on both the economy as well as the performance of some of the companies. Now, what should very long-term investors do who have a holding horizon of 1 year, 2 years, 3 years? Should they be bothered about what is going to be the outcome of the exit polls? I don't think so, because if you are buying the right company at the right price, and if it's a good company doing a good business, you should not be bothered about what is happening in the short run. Many of the investors like us who have been long-term investors have made huge money holding on to companies irrespective of who was at the center. So you've had UPA, you've had Mili Juli Sarkar, you have had NDA, but good companies over a period of time give you returns, so you should not be bothered. The only way you should be bothered, even if you are a long-term investor, is if you have borrowed to invest. So if you are borrowed to invest and you are leveraged in the markets, I don't think this is a great time to hold leverage. One, because the event over the weekend and going ahead, the election results are a significant event. Secondly, the global cues also have not settled. So although there might be calm in the global markets for the near term, but there could be another leg down which we have to see. And to that extent, you should be careful if you are borrowing to invest. The other category of investors are short-term investors. Short-term investors are those who largely buy on momentum, who hear of some story and then buy into a company, or do some technicals and buy into stocks. Their aim is to make 5, 10, 15% returns and get out, and then look for other ideas. So I think even for short-term investors, it's not a great idea to remain invested right now, because the markets might be looking oversold, many stocks might be looking cheap, but we could see a significant sell-off going forward if there is an unstable government at the center. So I think my advice to short-term investors is you should exit your short-term positions going into the next week, maybe tomorrow if you can. If you're holding very huge positions, obviously you cannot, but you should lighten up, go somewhat into cash and wait for the event to play. Now we come to the third category of participants in the stock markets, who are the traders. Now traders are definitely leveraged as they play the futures and options segment of the market, and when you are playing the futures and options segment of the market, you are typically putting in little bit of your capital and try to play a market direction in a manner where you make a multiple of the returns of whatever money you have put in. Now going into this weekend, my advice to traders is that you should go very light, and if you can, go with no positions at all. The reasons for this is that the outcome is extremely uncertain. From whatever I have been hearing around the place, the various polls, etc., everyone is giving a totally different picture, and there are various scenarios which can play up. So if the NDA, the exit polls in consensus show that NDA is just hovering around 240, 250 kind of number of seats, we could see the markets take it extremely negatively. On a seat tally of around 260 odd, the markets will be more or less neutral, and they will not take it negatively, but we might not see a significant up move. But if the exit polls show that the ruling NDA is actually crossing 275, they are going to 275, 280, 290, then the market reaction will be extremely positive and markets can actually shoot up significantly. But you need to remember that these events are uncertain events, and your cash which you hold is real cash. So what sense does it make for you to hold on to or create positions going into such an important event? It's like gambling at this stage, because the event is so uncertain that you might win or you might lose big. So my view is that traders should exit their positions both long and short. If at all you have to carry, you can carry very light positions and move into the next week. Now there will be some people who want to compulsively trade. They believe that we need to take a view one way or the other. So if you actually want to take a view one way or the other, then the best way to do it is via Nifty calls and puts. Now these days there are weekly trading of Nifty calls and puts. So for the traders who actually want to take a bet on either a positive outcome or a negative outcome, the best strategy will be one. For people who want to take a positive view and they want to play on the long side, the best strategy is buy next week's 11,400 strike call option. It's available at around 200 rupees on closing today. Or people who want to take a negative view, the best strategy for them is to buy next week's expiries 11,200 put option. That's also available at around 200 rupees. Now depending on whatever the outcome and the market move is, markets will either move up substantially or move down substantially. So as that happens, you can lose money. So now if your call goes wrong and the Nifty moves 200-300 points, the maximum loss on the long side, if the markets crack, for people who have bought calls, or on the short side for people who have bought puts, can be around 7,000-8,000 rupees per lot of trading. Now I don't know what each person's net worth is, how much they trade, but on a one lot basis you are taking a position on a positive or negative outlook, putting at risk a capital of 7,000-8,000 rupees, which is not much. So if you want to take a bet like this, you can do it in this manner, and that's the best trading strategy I would advise people going into next week. So that's all I wanted to say in this video. So I'll talk more to you after the exit polls on Sunday. So in the next video, which will be episode 5 of Call of the Week, will be uploaded at night on Sunday. So that's all from my side. Bye and see you that day.